Hey, everybody. I'm Paul Moore, and I'm so excited to be here with you on Biggerpockets Live and YouTube Live. If you can hear me, please let me know. So I see a lot of folks around here already. Hey, Russ. Hey, Terror. Hey, Charming. Hey, JK. Let me know if you can hear me, and we will get started. Today, we're going to talk about how to retire early using a unique real estate investing strategy. Now, this is aimed at anyone. Okay, hey Samuel, great to see you. Hey Kate, that's great. Okay, so tell me where you're from. Tell me briefly what you're doing, like in a word or two, and then save your questions for the end because I've got a lot of content today, and then we're going to do about half an hour of Q&A toward the end. So glad to see you. Hey Esteban. Want to make sure we are live on, I'm not sure if we're live on Facebook, but we're definitely live on YouTube. So hopefully if you're on Facebook, I guess you wouldn't know that you're not hearing me, so that makes no sense. But anyway, hey Betancourt family from Sacramento, I like your town. Hey Southern Oregon, Kate. Hey Giselle from New Jersey. Fix and Flip. Hey JK. Hey John from Ontario. William from Austin. Hey Edward. Wow, great. A lot of folks here. Hey Audrey from Homeschooling Mom Investing in Real Estate in Asheville, North Carolina, one of my favorite towns. Love going to the Biltmore Estate. Speaking of real estate, let's talk about 10 reasons not to invest in real estate. We're going to do this while people are joining. And then we'll get into this unique real estate investing strategy that's aimed at anyone, but especially if you're getting a late start. So 10 reasons not to invest in real estate. Number one reason, you prefer the volatility of the stock market. Hashtag exhilarating, not exhilarating. Number two reason not to invest in real estate, you like investing in funds and the thrill of not knowing exactly where your money is going. There's a lot of lack of transparency, and some of those ETFs, you never know. Number three reason not to invest in real estate, tax deductions are for wimps. Number four, you don't want any part in appreciating assets. Number five, the real estate bubble could pop at any moment, but the stock market is steady. It never crashes, does it? Number six reason not to invest in real estate, you love climbing the corporate ladder and you never want to stop. Number seven, financial freedom. No way. Golden handcuffs, that's the way to go. Number eight reason not to invest in real estate. Being someone's landlord would make you somehow feel older. Number nine, you'd rather your money go toward making a company's Super Bowl ad cooler than make someone's home safer and cleaner. And number 10, reason not to invest in real estate. You've done your taxes the exact same way using TurboTax for 20 years. You don't want any newfangled investments or passive income to mess all that up. Okay, so anyway, thank you so much for joining us today. If you are on YouTube Live, we're excited to have you here. If you are not on YouTube, you might not be hearing this. I'm going to put a comment over here in the Facebook side because it doesn't seem to be working. So I'm putting that over there, and now we're back on YouTube. And so save your questions. Hey JK, your mother-in-law told you not to be a slumlord. That's a good reason. And so anyway, so glad you're here. Today we're going to talk about a unique real estate investing strategy. A lot of people on Biggerpockets are talking about, what do I do if I'm 40 years old? What do I do if I'm 50 years old? What do I do if I'm 59 years old? Was a question that came on the Biggerpockets forum this week. And how do I get started? Is it too late to start? Well, Nate Shields is here, and he will tell you it's not too late. It's never too late. Warren Buffett has amassed 99% of his wealth since his 50th birthday. Now, if he can do that, you can do it too. He's only 89, right? So if you're 65 years old, Michael, you can still start investing in real estate. And so here's the situation. I honestly get a little discouraged when I see all those charts and graphs out there that say, hey, if you start at age 19 investing in your IRA and you put a little aside every year, you'll be way ahead of somebody who starts in their 40s and puts a ton of money aside. Time helps. So it can be depressing if you're 39, Nate Shields, dude real estate. It can be depressing if you're 59, like the gentleman who wrote in the, or the lady who actually wrote in the forum this week. I made a few $1,000,000 when I was 33 years old. So I found myself at 34 thinking, hey, I'm semi-retired. I'm an investor. Yeah, right. I wasn't an investor at all. I was a speculator. You know, investing is when your principal's generally safe and you've got a chance to make a return. But speculating is when your principal is not at all safe and you've got a chance to make a return. So I pretty much blew that money by the time I was 43, a decade later, and I had to start over. So it's frustrating for me to think about what could have been, but that's okay because I am loving life right now in what I'm doing. I have a couple real estate funds, by the way, that invest in passive assets like mobile home parks, self-storage, and apartments. I'm also an author. I've written 3 books on real estate investing. Biggerpockets is about to publish the 3rd one next year. So I came across this YouTube ad the other day, and I was actually about to ignore it, trying to listen to a song I really liked. And all of a sudden I saw Warren Buffett's name on there, and I zoomed in and I saw this graph that showed again that he had made 99% of his money after his 50th birthday. And I listened to the ad and they mentioned that 3 in 10 have zero saved for retirement, which means 3,000 people who turn 65 every day have nothing saved for retirement. I already know that 6,000 people a day who retire who turn 65 every day have nothing, have under 10,000 saved for retirement. Okay, so 6 in 10 who turn 65 have under 10,000 saved for retirement. So every financial planner will tell you that the shorter the time horizon, the less risk you should take. But you know that lower risk almost always leads to lower returns. Okay, so people that try to take more risk to make up for those many, many lost years actually have more of a chance of losing their money, because higher risk doesn't lead to higher return. It leads to higher potential return, but also higher potential loss. So you've got to come up with a creative strategy to actually have a reasonably low risk but outsized returns. And I think we've found that strategy. And I'm going to talk about it here. I'm also, by the way, if you miss some of this, I'm also going to be writing about this. And today on the Biggerpockets blog, my post on this exact topic comes out. So this is a real dilemma. You know, do you do higher risk and potentially lose it all? Do you do really low risk like CDs or money market funds or low bond rates and try to just eke up, make up the years that you lost? Well, there's several things that Warren Buffett does really, really well, and I'm going to talk about that today. Number one, Buffett invests with a margin of safety. This is a buffer to protect you against downside risk. There's always a recession coming at some point, and so Buffett is always investing with an eye to that, and he's looking for undervalued companies, companies that have tremendous growth potential but are not really priced at that level. Buffett has also made a lot of profit by investing in mom and pop, family-owned companies like a jewelry store, a local furniture mart, and many other mom and pop companies that have blossomed under his leadership, including the largest home builder in the United States, Clayton Homes, which was a family-owned business until Berkshire Hathaway bought them. Buffett has also made a fortune betting on great jockeys and letting them choose and train the horse. He puts great faith in his management teams. In fact, Buffett had so much faith in the Capital Cities team that when they called him and said they wanted to acquire ABC in 1979, I think he only spent like 15 minutes on the phone talking to the guy ahead of Capital Cities and made the decision to invest a boatload of money in that. And of course, he made a huge boatload of money. Buffett also looks for recession-resistant assets that aren't reliant on speculation or technology. In fact, he was mocked and ridiculed back in 98, 99, 2000 for not investing in the tech bubble. And many people said he needed to be put out to pasture. He had missed the boat. And you know what he said? He said, I know in general what the economics of, say, Wrigley chewing gum will look like 10 years from now. The internet isn't going to change the way people chew gum. Now, what he was saying by that is the internet stocks and other tech stocks could massively go up and down because of changes in technology, and he wasn't willing to take that risk. Well, there is a strategy that incorporates all of these Buffettisms, and we're going to briefly review it. Strategy point number one. I've got 4 or 5 points here. Number one, invest in commercial real estate. Did you know that if you looked at a return versus risk chart, core commercial real estate assets will be by far the combination of lowest risk and highest return of any asset class? Perhaps this is why most of the Forbes 400 wealthiest people in the world invest in commercial real estate. Maybe you should too. It's confirmed by the Sharpe ratio, SHARPE, which is a measure of return versus risk. And multifamily, self-storage, mobile home parks have an incredibly low risk, in other words, standard deviation of returns versus their returns. And so self-storage, mobile home parks, multifamily, they've done 3, 4, 5 times as well on the Sharpe ratio as things like private equity, the Dow Jones, and the S&P 500. So my first point is invest in commercial real estate. I've done a lot of other talks on the value formula for commercial real estate. Value is the net operating income divided by the cap rate. And so investing in commercial real estate is really, really powerful. Strategy point number 2, invest in recession-resistant assets, like Wrigley's gum for Buffett. There's a great book called Mastering the Market Cycle by Howard Marks. I really recommend it. And he talks about fear and greed, and you've heard Buffett's thing, let's be fearful when others are greedy and greedy when others are fearful. Recession-resistant assets do well in good and bad times. So think about mobile home parks. By the way, our own Brandon Turner is investing in mobile home parks these days. If people get bounced out of their home in a recession, they might go to a rental home or an apartment. If they get bounced out of an apartment, they are likely going to go to, or they could go to a mobile home, and their $280 lot rent, which is a national average, is a great place to be compared to a $1,000 or $2,000 mortgage or apartment rent. Now, Robert Helms from the Real Estate Guys Radio, who was recently on the Biggerpockets podcast, said, live where you want and invest where it makes sense. And Brandon just ate that up. And Brandon, he's investing in mobile home parks, and we are too. Like I said earlier, about 6 in 10 people who turn 65 have less than $10,000 saved for retirement, but a lot of them have equity in their home, and a lot of them are trading that in for a mobile home park lifestyle. So strategy number 2, invest in recession-resistant assets, things like mobile home parks. Strategy point number 3, acquire from mom and pop operators. Owner-operators that are mom and pops have a lot of meat on the bone. A lot of them live by the mantra, if we build it, they will come. And come people did into self-storage, mobile home parks, small apartments for years or decades, but things have changed now. A lot of these folks are sitting back collecting checks, collecting mailbox money from the beach. They might be a mobile home park operator or self-storage. Self-storage, about 40,000 of the 53,000 self-storage facilities in the U.S. are owned by independent operators, and a lot of those are mom and pops. So a lot of them don't have a website. A lot of them don't have a showroom. They don't sell locks, boxes, tape, and scissors. They might have across-the-board pricing, they have poor security, poor lighting, they don't do much marketing, if any. They might have untapped land, an acre or two with their storage facility that's just grown up in weeds or parking that could be turned into a profitable climate controlled storage facility. They don't rent trucks like U-Haul or Penske. There's a lot of things that can be added and dramatically ramp up the value and the income at a mom and pop self-storage, mobile home park, or apartment. So third conclusion, acquire from mom and pop owners and upgrade, and then if you can, sell to a REIT on the other end. Now, the fourth strategy is bet on the right jockey. Like I told you, Buffett doesn't create insurance policies. He doesn't build mobile homes. He doesn't, do mortgages for mobile homes. He doesn't make Wrigley gum. He has great teams that he invests in that make Coca-Cola and do all the other things that he does. He doesn't build these things from scratch. In fact, he has less than 30 people in Berkshire Hathaway's home office. Think about it. One of the largest companies in the world, they only have 30 people in their headquarters. They've outsourced the operations to great jockeys, and this is what I'm recommending as well. So fourth strategy, again, invest in a great jockey. I was talking to a lady, and I've told this story before, and she was saying, I don't know how to invest in real estate from where I am. And she was in a town that was way too expensive to invest in. And she was saying, I want to invest in a different city. And I said, well, you're going to have to find a property manager and a realtor, and you're going to have to go on do an on-site inspection, and you're going to have to all this stuff. And she was just getting frustrated, and she realized she could probably make more money by investing passively with a great commercial operator, and she wouldn't have to lift a finger except to go to the mailbox to pick up her checks. And she just exclaimed to me out loud, she said, why am I working harder than I need to make less than I could? And so this is what I'm talking about. So if you're 35 and you wish you would start investing at 20, or if you're 59 and wish you'd started at 40, this is a way to play catch up. Using this strategy, I'm outlining this in my article that's being published by Biggerpockets today. And I've also got 2 free special reports. If anybody wants these special reports, you can come to my Biggerpockets profile and you can ask for my special report on mobile home park investing or my special report on self-storage investing. You can also visit our website, which is wellingscapital.com/resources. And if you visit that website, wellingscapital.com/resources, you can ask for any of these free special reports. And so now I'm going to try to answer some questions. Let me take a drink of water and see where we're at. Now we've got Dude Real Estate on here with us. That's Nate Shields from Madison, Wisconsin, and he is going to be trying to help me answer questions as well. And so Nate, thank you so much for joining us. Someone says, what if you're not an accredited investor? If you don't know what that means, you can go look it up. There are so many opportunities as a non-accredited investor that have never been there before, and we're so excited about this because it's giving lots of people opportunities to invest who didn't have the chance before. And you can find a lot of those opportunities on crowdfunding websites, so go check it out. Thanks, Giselle. That's so nice of you to say that. What DRE said also syndication. Okay, I'm not sure what that's referring to. Where am I located? I'm in Lynchburg, Virginia. I am in Central Virginia. We've sold our company in Detroit and moved to the Blue Ridge Mountains and have loved it here for the last 21 years. Someone's asking about tickets for the Biggerpockets Conference. Hey folks, the Biggerpockets Conference is coming up in Nashville in about 5 days. And I just heard before this show that they'd sold out. They may have sold out a while ago, but would love to see you there. If you're going to be there, please look me up. Again, I'm Paul Moore from Wellings Capital, and I'm going to be speaking on Tuesday afternoon at the conference. Okay, let me try to answer a few of these other questions. Tim says, hey Paul, do you offer advisory services for a fee? Tim, you can reach out to me on my Bigger Pockets profile. It's not something I generally do, but you can reach out to me or you can reach out to Dude Real Estate. He's helping a lot of folks as well. Algo says number 11. Okay, 10 reasons you shouldn't invest in real estate. Maybe number 11. One can passively invest in equities and virtual syndication with powers that be who can and do keep the stock market afloat. Real estate investors are on our own. I agree. Is there a way for someone young to invest in real estate without accumulating tons of debt? B squared 64 says. Yeah, there probably are some ways to do that. You can certainly invest in cash. You can invest passively. You can go get a mentor or a coach and work for them, and they might be able to help you figure out some ways to do that. How do you find off-market mobile home parks? Michael, I actually, there's a whole strategy to that. And there's training conferences. I talk about this in my free special report on mobile home park investing, but I only talk about it briefly. You can mail letters. You can drive up and look for the owner. You can mail postcards. You can do a phone calling campaign. Or, like I said before, you can invest passively, which is the way I do it. And that's what I love about real estate. Someone asked, did you go for those home occupancy loans? I think you're asking somebody else. So I'm going to skip that one. Currently 24, just starting to build credit. Wish you'd started at 18. Dane, good for you. Start at 24. If I would have known what I know now about real estate investing, especially about commercial real estate investing, I would never have done anything else. My son is 26. My business partner is also 26, and I tell them and others all the time that is, to me, a great way to go. Now, if you're on the YouTube channel or the Bigger Pockets channel and you haven't got your question answered, please copy and paste it in again, and we'll try to get to it. Clay Cap says, I'm 17. Wow, awesome. Good job, Clay. Hey, how about a thumbs up, a like, for Clay Cap here. He's 17, in high school, been reading plenty of books throughout the year and trying to understand more before I go off to college. I'm ready to start slowly when I get to college. Clay, if you can get going in college, if you can get going on your real estate investing career before or during your time in college, that would be awesome. Giggity says, I'm too late at 24. No, you're not. Nate Shields didn't start until he was 36, and he has 25 units now, and he also makes other types of income, and he has been super helpful to me here on this show. J.K. Lim says, my mother-in-law told me not to be a slumlord. Edward says, the sky is falling. Okay, thank you, Fabio. Thank you, Latia, Omar. All right, great. Let's get to some more questions here. Thanks, Tim. That's really nice of you to say. Zachary says, do you know if it's possible to get a construction loan on a mobile home park that needs extensive repairs? Any other types of financing you'd recommend? Zachary, Fannie Mae and Freddie Mac would not be good options for you. Yeah, I'm going to say, Zachary, you should try to go to a local bank, local credit union, and try to find someone there who can finance your mobile home park that needs extensive repairs. You can also try to get owner financing from the owner. That would be my main way of doing it. Basically pitch the owner, Zachary, on why it's going to be very, very hard to get a conventional loan, and tell them why it's so important that you get owner financing from them. And I think you'll have a really good shot at getting that financing. So Edward says, I'm in Stuart, Florida. Anybody want a JV on wholesaling? Okay. Anybody want a JV with Edward on wholesaling? Average Jelly says, what do you mean by invest passively? What steps can I take to start that? Okay, so there is a website, Ian Ippolito's website, which is the Real Estate Crowdfunding Review. I don't get paid by them in any way. But go Google the Real Estate Crowdfunding Review. He talks about a lot of different accredited and non-accredited investment opportunities. This is what my company does, We actually work with accredited investors to find great real estate opportunities. I'm going to look at Tess here. Tess is 34. She says, I have low income, but I have a decent start for a deposit. What route would you suggest I choose to get started in the real estate game? Low income, decent start for a deposit. Yeah, Tess, you could consider a lease option sandwich or a rent to own sandwich. If anybody wants to talk about that, Tess, if you or anybody else does, I will give you a very brief overview of how that works. But someone's going to have to ask. I don't want to bore you guys because it's actually a little bit in depth. But I would always recommend that, or possibly doing an Airbnb or corporate housing arbitrage. Now, if you want to know about that, you can hit me up on my Biggerpockets profile or my website, wellingscapital.com/resources. And I can give you some resources on how to get into the Airbnb or corporate landlord arbitrage. It's often a really, really good way for people to get started. Okay, Marcus says, please talk about the sandwich. And Noemi, says, please repeat where to get passive investing resources. So there's websites like fundrise.com, crowdstreet.com, realtymogul.com. There's our website. There's lots of places you can learn about being a passive investor. And I highly recommend it because none of us can be an expert at everything. And especially if you have a well-paying job, I just don't think that you're going to be able to do a great job at your well-paying job and also invest on the side. That's my opinion. And I've seen it over and over and over. So Marcus says, talk about the sandwich. Okay, I'm going to go over this once very quickly. So if you're interested in the rent to own or lease option sandwich, you better lock in here, Tess. Okay, great. I saw your hand out there. I saw that hand. Anyway, so what you do is you find a house that's about to be foreclosed on. Okay, it's in the newspaper. It's going to go to the courthouse steps in about 2.5 weeks. And you go knock on the door or call them and you say, hey, I think I can help you rescue your foreclosure. Now, what you do is you rent to own the house from them, okay? And they move out, you sweep it up, you paint it, whatever. You do very little. And then you find someone to rent to own it from you, okay? So you're rent to owning a house, you're rent to owning it to somebody else. And so you're the sandwich, you're the meat in the middle of these two pieces of bread. Now there's a lot more to it. You've got to put it into a land trust. You've got to pay the mortgage directly. Don't hand the money to the previous owner to pay it. You pay the mortgage directly. It should not trigger the due on sale clause if you do it right. I know I'm going over this really fast. And then when you rent to own it to somebody else, you collect a big deposit check from them to help you catch up on the old person being behind. The old person, I mean the former owner. So the former owner is way behind. The new owner, the new buyer will be willing to give you a deposit check, and when they do, you can use that deposit to catch up on the previous mortgage that is way behind, and then you stay in the middle. And let's say you're buying it for the payoff of the mortgage, which, for example, one deal I did like this was $140,000, and then you sell it to somebody else on a 3-year rent to own basis for say $190,000. So you make a $50,000 profit, plus you're making a markup every month. So if you're paying $800 on the mortgage, you're collecting $1,200 on the other side. Again, you're in the sandwich and you're in good shape. So I hope that helps, Tess. So Scott says, hey Scott, how are you? Still want to buy the lamp from you. That's funny. What are your thoughts about investing in off-campus student housing in Binghamton University? Is that Binghamton in New York, Scott? I've got a friend who went to Binghamton. I got 2 friends that went to Binghamton. I don't know. I'm a little nervous about, you're welcome, Marcus. I'm a little nervous about campus housing. I'm here in a town where Liberty University is. They have 15 or 18,000 students on campus. They're building all these dorms, but they've got 100,000 people in their online program from around the world. What if all colleges go online? Is student housing going to be a good place to be? I don't know. It seems to me like a little bit risky. So that's what I'm thinking. I don't know. Rod says it's never too late to start. I'm 72 after losing my savings to cancer 3 times. Oh man. Because I use natural medicines in 70 to 2000 turned over 100 properties. Wow, from 1970 to 2000. That's amazing. Rod, hats off to you. Everybody give Rod a thumbs up, a smile, and all that. May the Schwartz be with you. Says, I'll have to take a look. I'm going to back and forth. Okay, you're talking to somebody else. That's cool. By the way, if you guys want to answer each other's questions, I'm all for it. That's great. There's no way I can get to all of these. Minnie Grider says, I'm 63 and retired and have some capital. Should I be a hard money lender or buy rentals? I think the ROI on being a hard money lender is pretty high. And so I would consider that, but make sure you do it right. Put all the controls in place. Make sure you can't get bumped out by bankruptcy, which happened to me once when I made sort of a hard money loan about 20 years ago. Just be real careful. Dane says, I've heard the advice of finding a mentor a few times. When looking for a mentor, what type of person do you suggest I reach out to? Realtor, landlord, contractors, or real estate investors only? It really depends on what you want to do, Dane. If you know exactly what you want to do, you should go look for, let's say you want to be an asset manager, go find a big apartment or self-storage or multifamily, owner. I said that. If you want to be a loan officer or a realtor, go find a mentor in that way. I heard of a guy the other day who was an expert in online marketing, and he was up north somewhere. He was visiting Florida, and he met this lady who did some enormous volume of real estate. I think it was $200 million in sales a year. I just heard the story this week. And he said, oh, what are you doing for online marketing? You must be crushing it with Google and Facebook and everything else. She said, I don't do any online marketing. He said, well, wait a minute, you don't do any online marketing? He said, I'm an online marketing expert. I think you could take your business from 200 million a year or whatever it was up to like 400 million a year if you just went online. So they decide to partner together. That's his entree. Basically, she's going to be his mentor and he's going to be her mentor in his expertise as well. But yeah, there's 2 types of mentors, folks. Number one, you can go to somebody who's successful in business and you can offer to work for them for free in exchange for learning their business. So you're providing them a service. Don't go and ask them to train you and teach you and coach you. Ask them how you can serve them. And then that can morph into a great career for you. I've written about this before on Biggerpockets, and I've written about it in my most recent book as well. The second way to do it is to hire a paid coach. You can hire a paid coach, and then sometimes that costs $10,000, $20,000, $30,000 a year or more. Minnie says, what's the best way to learn or best mentor for about hard money lending? Anybody got an answer on that? What about you, Nate? I don't know. No Deriela says, how can I serve you? That's so nice of you. You can reach out to me on our Biggerpockets profile. Dane says, thanks so much. I appreciate you and Dude Real Estate. Okay, good. The Thrill 04, do you think it's worth refining 2 houses that net $750 a month cash flow to purchase additional properties? It would take 2 more houses to get back where I started. Well, just be careful. Don't go to a too high to loan to value ratio now. There's some people talking about a recession. And, I think it would be really, really good for you to just be conservative right now. I don't really know if there should be a recession coming, but a lot of people think that there is going to be. So someone says there's a BP book about investing in notes. That's awesome. Okay. So there you go. Platinum Candy says, how old do you need to be able to buy real estate? I'm still 17. Hey, hats off, Platinum Candy. Man, this is amazing. All these young people on here today. I love it. I would say 18. That's when you can legally enter into contracts. Christina says, just got my real estate license in California, taking care of a 3-month-old. Any work from home ideas? Yeah. Airbnb and corporate rental arbitrage. And if you want to learn more about that, just reach out to me. Again, I'm Paul Moore. you can reach out to me on my Biggerpockets profile or at wellingscapital.com/resources, and I can tell you more about that. It's just a long story, and if anybody here is begging me to explain Airbnb and corporate leasing arbitrage, I'll do it. It's a great strategy for beginners or people who are very busy. Thanks, Platinum Candy. Edward Yeager says, thanks for all you do. Appreciate it. Hey, me too. It's great to be here with all of you. This is amazing. I'm so amazed that I get to do this. Clayton Roach says, in your opinion, at what point does a loan to value ratio become too high? Well, it depends. It depends on the market. Like if you're in California, Nevada, Arizona, or Florida, they have wild swings. And so sometimes, their values will go way, way up, and sometimes they'll go way, way down. And so if you're on the bottom end of that cycle, let's say 2009 to 12, you can afford to take a higher loan to value ratio. But if you're near the top of the cycle, which is where I think we are now, I would say that it would really be wise for you to stay under 65%. I finally got around to answering your question. Gretzel Ramos says we are 50 years old. We have $300,000 to invest in passive income, but don't know where to start. Yeah, like I said, you can go to the Real Estate Crowdfunding Review website, or you can reach out to me on Biggerpockets or my website, and we can chat about that. There are a lot of great resources and great places to invest. Life of a Capricorn says, I want to hear about Airbnb and corporate arbitrage. So does Kate. Okay, so let's go into this real briefly. Now, this is actually kind of similar to the strategy I talked about before, and that is basically you're going to want to, you go out and find an apartment owner, whether it's a huge new development or a small whatever, and you basically try to get a month-to-month lease from them. You find a tenant for it, a corporate tenant. You know that you can get corporate tenants at 2 to 3 times the amount that the apartment rent is for sometimes. In other words, if the apartment rents for $800, sometimes you can rent that furnished apartment on a short-term lease to corporate tenants for like $2,000 a month, like 2.5 times, okay? Not always, but it depends on the market. But so imagine you rent that apartment, month-to-month lease if you can. Try to get flexible. Try to get friends with become friends with the property manager or owner, and then you lease the apartment. You furnish it. You get the internet. You get the utilities set up, and then you lease it out for, let's say, $2,000 a month. Now you might want to rent the furniture to get started on a short-term rental basis. And you might want to just do everything you can to cover your risk. But if you can get this going, somebody who watched me talk about this about a year ago, are you ready for this, folks? They now are grossing $70,000 a month doing this. They called me the other day and they said, thank you for telling us about this. And I had to credit the guy who I know, Al, my friend Al, who teaches people to do this really well. He's got 15 or 20 different ways to get corporate tenants, and then he plugs Airbnb in the gaps between these long-term corporate tenants. When I say long-term, I mean 3 to 6 to 9 to 12 months. Okay, so if that's of interest to you, reach out to me on my Biggerpockets profile. Again, I'm Paul Moore, or go to my website, wellingscapital.com/resources. And we will forward you the information about that. We can also talk about passive investing opportunities, house hacking, anything you want to. Speaking of which, Platinum Candy says, is there a good option to house hack in different locations? Start from there. Don't really know about that. Oh, you're from Bulgaria. And you're recommending, you're talking about doing it out of state. What do you think about that, Nate Shields? LA 1212. Says anyone here in Chicago? Okay. Nate is familiar with Chicago. Zachary Gross says, if I'm starting with limited funds, 15 to 20,000, and willing to self-rehab my first property just to get started, do you have any advice on how to finance a property that might not qualify for conventional? Zachary, you can ask around on Biggerpockets. You can try to find somebody to do private money. There's also some of these credit card programs that will give you money interest-free for 12 to 18 months, and they're legit. You can go Google that. I've got a couple friends who've done that, and they borrow like 40, 50, 60, $70,000, and then they get the flip done, and then they pay the money back. They might do another flip before that credit card interest kicks in. So that's something. I wouldn't always recommend that, especially, take a large margin of safety, a buffer, because you don't want that to go south in a recession. Texas Country Living says Jay Martin of BP has been doing short-term rental. Oh, okay, arbitrage in the Bay Area for years. Oh, that's great to know. Okay, I'm going to meet Jay Martin. Oh yeah, Jay Martin. He's going to be speaking at the East Coast Pockets Conference in Philadelphia, October 18th, 19th, and 20th, and I'm going to be speaking there as well. Jay Martin he is using the exact program I'm recommending, by the way, the exact program. He's one of two people I met at a conference a year or two ago that taught me to do this. Bo Neal says, is Airbnb a great way to go as a real estate beginner? Yes, I think it's a great way. Mal says, how about outside the States? I'm not sure what to say about that, Mal. Can you clarify the question a little bit? The Thrill 04 says, to do BRRRR, though, I have to refi the two houses to free up cash, right, to buy more properties. I'm in a very stable market, just not sure about going backwards before growing. Yeah, there's a great book about apartment investing, and you guys think I'm going to tell you about my book. You can get that too, but it's called I'm looking for it on my bookshelf, but I can't see it. The Complete Guide to Buying and Selling Apartment Buildings by Steve Burgess, Berges. Steve Burgess apartment building book. It's got a lot of information that could really help some of you on that topic. Food with Fam says, all right, Mal says abroad, say Europe or UK. I don't really know, Mal. I don't know anything about that. Does anybody else know how to invest in Europe or UK? I'm sorry, you stumped me on this one. Gretzel Ramos says, I'm interested in commercial investment. What do I do to start? Gretzel, that's my passion, and I would love to talk to you about commercial real estate investing. Feel free to reach out to me at my website, wellingscapital.com, or my Biggerpockets profile. I love commercial real estate investing. It is the most incredible path that I know with limited downside risk to exploding your wealth. Food with Fam says, since a recession might not or is going to come, would this be the right time to buy a property, or should I wait a couple of years? It depends. All these markets are local, and it might be good to sit on cash and wait if you can't find a good deal. Do not do a bad deal just to get a deal done. That would be an awful idea. But Neil says, do you do seminars in other countries? Yes, I do. Reach out to me. I'm happy to do one. I'm doing one on the other side of the country via video in the next couple of weeks, and I'd love to do one wherever you are as well. Che DeBrune says, I'm in the DC area, about $40,000 to invest, and looking to connect with someone to discuss options. Willing to do a fixer-upper but have zero connection with contractors. Hey, Che, I would recommend that maybe you consider partnering with somebody. You bring the $40,000 and you guys work together. That might be a way to go, or you might be able to invest through a crowdfunding website in a bigger deal. And again, I'm really a big fan of passive investing. Ken says, what cities do you think have the best price to rent ratio? I've been hearing Memphis and Indianapolis are really great for the price to rent ratio. Bonil says, I'm in South Africa. That's great. Bonil, that'd be fantastic. I'd love to do something via video there. Will this show be archived on Biggerpockets, Peter? Yes, it will. Oh, you answered. Thanks, Nate. There are some good real estate investing podcasts that are just for the UK. If you want to invest there, start following others in the region, Zaykeon says. Thank you. Audrey Mart says, can you spell your name, please? I can't find your profile. Okay, it's Paul, Paul, Moore, Moore. My website is Wellings, Wellings, capital, capital.com. You can get any information. You can get our free special reports or our 5-part real estate investing series on commercial real estate investing. It's going to be out next week. You can get that by going to wellingscapital.com/resources. Kevin says, how do I start in real estate at 18 with no money? Kevin, I would recommend doing a lease option or rent to own sandwich, and possibly an Airbnb or corporate rental arbitrage. Giggity Goo says, I'm actually going to be house hacking when I get out in the military in Ohio. Yay, Ohio. I grew up there. But I wanted to stay active in investing to build my real estate assets during the seasoning period. Suggestions. I'd recommend just reading all you can, doing podcasts, learning all you can, and see if you can link up with somebody else who's more experienced, like getting a mentor. You asked about a possible home loan. What would I suggest for a house hacker before an FHA? I would recommend finding a local credit union or a bank to do that. So Angel Perez says, I'm investing in Spain, live and work in New York City. It's so expensive, and it's not expensive, and cash flow is great. More if using Airbnb. Okay, there's something, folks. What's a seasoning period? Nate, you can answer that. Ken Ishta says, what city in Ohio did you grow up in? I grew up in Middletown, which is between Cincinnati and Dayton. I also went to Ohio State in Columbus, went to Marietta College before that. So Audrey says, merci beaucoup, Paul. I probably butchered that. Hey, Kevin Mendoza, can you explain what a sandwich is? I talked about it earlier in the show. Basically, you're renting to own a house that's in pre-foreclosure or in trouble, and you rent to own it to somebody else. And so you can probably Google lease option sandwich or rent to own sandwich. Do I know of any crowdfunding groups? I'm leery of those online sites that offer that service. Yeah, they're only online, I think. I mean, I don't know of any other place to find crowdfunding except online. So Nate, I see you're speaking to that as well. Thank you. Seasoning period can be basically it depends on the context. I was hoping to avoid that because I know somebody else mentioned it somewhere, but I can't remember where. Seasoning period can mean this. If you get a VA loan, for example, you have to live in the house for a year, or an FHA loan, I think. You live in it for a year before you can sell the house. Okay, there's a ton of questions here on the Biggerpockets site. Can you describe the difference between me buying a 4-unit or a 5-unit? I know once you go from 4 to 5, it's a different game. Scott, that's true. You get out of residential and you get into the commercial asset class. You have to get a commercial loan, and it will be a full recourse loan, of course. But you are getting into a commercial level loan. If you can go with a local bank, that is, I think that's a great way to go. Tess, you're welcome. I'd like to know more about how to land a contract for corporate arbitrage. Folks, I told you about somebody who's making $70,000. That's gross a month by doing this. I know of another guy who was terrified to go ask for a corporate contract. He finally went to the small airport in his area. He took a gift basket in and he asked to see the owner or the manager of the airport. And they actually asked him lots of questions about his 1-unit corporate rental. And the guy said, can I follow you back to your 1 unit? And he said, yes. The guy followed him back. He looked around, saw it was furnished nice. He said, okay, can you get me 50 more of these? What? He had 50 people coming in for pilot school, and he had to find a place to house these 50 people. Imagine having that problem, my friends. Matthew says, okay, kind of a unique question. I can't find anywhere else. I'm a dental student, basically with no income and debt, but great credit. Am I relegated to investing? I graduate years from now. Am I relegated to investing? Do you mean passive investing, Matthew? I personally think that the passive investing for a dentist is the best way to go, and I've got a lot of data points to show this, and it's kind of what I talked about earlier at the beginning of the show. And also, if you can find my article that just got published last hour on Biggerpockets, it would be that would be a great place to look. Platinum Candy says, how many properties do you own? Have you worked in the real estate industry for how long? 19 years in real estate. My fund that we started in January 10 months ago is investing in 33 properties right now. We have a stake in 33 passively, and then we have other properties we bought before the fund started. Food with Fam, looking to buy a property to rent out for passive income. Any books you'd recommend on real estate investing? Yeah, Steve Burgess, The Complete Guide to Buying and Selling Apartment Buildings. I've got a book called The Perfect Investment, and you can buy that on Amazon. Dalton says, when you're doing an FHA loan, can you refinance after 6 months? Oh, I forgot. There's so many books on real estate investing on Biggerpockets. And I'm not just saying that. They got some of the best books out there on real estate investing. Somebody asked me earlier about where to find your first mobile home. By the way, I'd never ever invest in a mobile home. I would invest in a mobile home park. You're going to want to get the land, the dirt, the infrastructure, the streets, the sidewalks, but not the mobile homes. You want to partner with the tenants by letting them own their own homes. And if you end up with a mobile home, let's say I got Rats says, any thoughts on trailer homes? Yeah, if you end up with a mobile home, try to get rid of it as quickly as you can to a buyer. You can sell it, and it's almost always better to own the mobile home park, the dirt, the infrastructure, etc. But Neil says, well, I'm not that connected. Do you coach people via social media network like What's Up? But Neil, if you're talking to me, not Nate, I could possibly, I don't do that in general. So you can reach out to me, we can talk about it. I can probably recommend somebody else to you. My mentor was a company called 37th Parallel, and I really think that they're a great mentor. It's $25,000 for their program though. Giggity Goose says, okay. Latia Taylor says, anyone here looking for a job opportunity in Illinois for extra real estate funds? You're conducting interviews next week. Okay, Latia, there you go. Kate says, great advice on owning or not owning a mobile home. Yeah, Kate, I'm telling you, I've owned 4 mobile homes in my life, and 3 were an absolute disaster. I'll just leave it at that. I highly recommend investing in mobile home parks. It is the most stable asset class that I'm aware of anywhere in all of real estate investing. Avalon Gaming says, hi, I'm Eric. I'm planning on investing in Las Vegas for a duplex near my job when I transfer in North Las Vegas. What do you think is the best first move I should make? So you want to buy a duplex, and do you want a house hack, Eric? I'm interested in hearing what you're thinking, and then maybe Nate can answer your question if I don't get to you. Okay, here is the Wright-Patterson. So you're going to be at Wright-Patterson near Dayton, Ohio. You know, I mean, there are some outlying areas south of there. If you go state route, I think it's 43 south from Wright-Patterson down to Waynesville and Lebanon. They're, still growing areas. And so, I mean, Dayton has been not a great place to invest overall in the past, but it's getting much, much better right now. Latia asked about container homes. I don't really know. They probably got their pros and cons. I've done a little bit of that type of investing in North Dakota years ago, but I haven't for, almost 8 years now. So Brandon Turner, Josh Dorkin, How to Invest in Real Estate. Yeah, that's a great basic book. Brandon's got, one of the top books on real estate investing year in and year out on, the Amazon and other top 10 lists out there. So Avalon says, yes, I plan on house hacking. It's me alone. I'll be living in the property. I plan on doing an FHA. Excellent. I think that's a great plan. And then Nate, I see, agrees. So, okay, folks, we're down to 5 minutes. And so if you haven't liked this, if you like this episode, if you got value on it, please give us a thumbs up, a like, or share this episode. It will tell YouTube and Biggerpockets and Facebook that that we are doing something valuable here, and it will keep me from getting fired. Thank you. Okay, seriously, give me a like, thumbs up, share, and reach out to me. Again, I'm Paul Moore. My company is Wellings Capital. We have accredited investor passive investing opportunities in funds and commercial real estate. Thank Bonil. So we're going to do everything we can to get you a free special report on mobile home park investing, self-storage investing, or our 5-part course on commercial real estate investing if you reach out to us. Okay, so since we're down to 5 minutes, it's going to be the lightning round, where Nate and I are going to try to answer as many questions as we can, as quickly as we can. Thanks, Platinum Candy. Hey, Pidwell, I'm an American living in New Zealand, new to investing, looking for partners or mentor. Any Biggerpockets members interested in New Zealand? How can I serve you? Great question. Not sure what to say about that, but if anybody else is interested in New Zealand, it's a beautiful place. I toured it 10 years ago and thought about maybe even relocating my family there, but I obviously didn't. Hey, Minnie, thank you. Pidwell, thank you. Thanks, Kate. That's kind of you. Angel, thank you. No Durelo says thank you. Check your email. Yeah, you can email us info@wellingscapital.com if you want to email us directly. Giselle says if you notice a corporate center or an industrial center being constructed in a depressed area, would you be inclined to invest in properties nearby? Giselle, maybe. All things considered, I would think that would be a good thing to look at. There's a lot of other factors, however. Food with Fam says thank you for helping us out. Thanks, Mr. B. Curtis. All right, you guys are too kind. Thanks, guys and gals. This has been great. Tess, Matthew, thank you. Scott, thank you. Hope I answered your question on dental investing. Thanks, Wilman. Kate says, when buying a property, do you always use an attorney for the deal or a title company? Either one, Kate. Either one. I don't think it makes any difference. I've never had an appreciable difference, and I've done both dozens and dozens of times. So Nate says it depends on the area. Minnie says, I live in Amarillo, Texas. I'll contact you for mobile home and self-storage ideas. Thanks. Okay, great. Wilman says, what do you think of Punta Cana apartments investing for Airbnb? I don't know anything about that. I'm sorry. Corporate Hustle says 203K loans if you already are a homeowner, or are you able to get one? I don't know. You stumped me completely. Nate, can you help? Zachary, as a first-time investment, house hacking nearby or mobile home park in another state? Yeah, it depends. I mean, it could be either. I would try house hacking nearby if you can. Buying a mobile home park in another state carries a lot of risk, and you really need to know what you're doing. Z400 says, are you interested in investing in businesses? No, probably not. We invest, stable, okay. Well, if anybody's interested in investing in a stable business, you can check in with Z400 Racer 37. Kate in Medford, Oregon. Okay, Kate, I don't know much about Medford. I have been to Medford. I flew out of their airport before, and we have 3 self-storage properties in the Medford area that we have invested in that we're getting ready to sell. So, great area just north of the California border in Southern Oregon off I-5. See, I actually had to act like I knew something about it. I really don't know anything about it. Anyway, that's a joke. Okay, well, thanks, folks. This has been great. I hope you'll check out my new article on investing in real estate over 40 years old. It's out on Biggerpockets today. If you're at the Biggerpockets Conference, please come to my session. Please walk up to me, say hi. Would love to see you. If you want the self-storage or special report or mobile home park special report, if you didn't catch how to get it, you can actually go to the article I wrote today, and I'm telling you how to get my free special report. Thank you so much. Thank you, Nate. Thank you. By the way, if you need some help with something, Dude Real Estate is doing a great job helping me out and helping others. And so hopefully you'll be able to connect with him. Thank you, Matthew Meyer. Thanks, Tess. land contract. Yeah, check out again Paul Moore, Biggerpockets profile. Okay, everyone, it's 5 o'clock Eastern. We're going to wrap this up. Thank you so much. It's truly an honor, and I'm just amazed that I get to do this. I'm amazed that I get to be here with you, and I'm hoping that you'll share this with a friend, that you'll connect with me on Biggerpockets, connect with me at my Wellings Capital website, and hopefully I'll get to meet a lot of you in person at the Biggerpockets Conference this weekend. Okay, take care, be blessed, have a great week, and we'll talk to you next time.